Welcome to Charged Alpha. I'm Hudson, joined by Lana. Today's chapter, Corteva Agriscience, the pure-play agricultural science company behind Pioneer Seeds and a growing crop protection portfolio.
Corteva was spun out of DowDuPont in 2019 as an independent, pure-play agri-science company. Its roots trace back to Pioneer Hybrid, the Iowa seed company founded in 1926 that pioneered hybrid corn.
DuPont acquired Pioneer in 1999, and when Dow and DuPont merged in 2017, the agriculture segment was earmarked for its own listing. Corteva's independence lets investors take a direct position in agricultural science.
The business splits roughly 50-50 between seed and crop protection. The seed segment is anchored by the Pioneer brand in corn, soybeans, and canola, crops that feed the world's people and livestock.
Pioneer represents decades of genetic improvement, higher yield, drought tolerance, pest resistance, protected by plant patents and not easily replicated by competitors.
Seed gross margins run around 45%, reflecting the pricing power of proprietary genetics. Farmers pay a premium for Pioneer varieties because the yield advantage translates directly into revenue.
The crop protection segment sells herbicides, fungicides, and insecticides. In recent years, Corteva has added biological crop protection through the Stoller and Symborg acquisitions, entering the fast-growing bio-input market.
Corteva invests over $1 billion annually in R&D, roughly 9% of revenue. That engine is the source of its long-term competitive advantage in seed trait innovation.
The distribution network is a structural asset. Corteva's agronomist and dealer relationships across 140 countries represent years of trust building that new entrants cannot shortcut.
Global food security is a genuine long-cycle tailwind. World population is growing, arable land per person is shrinking, and yields must increase, exactly what Corteva sells.
CEO Chuck Magro joined from Nutrien in 2021, succeeding Jim Collins. His fertilizer and nutrient background complements Corteva's seed and crop chemistry expertise.
His focus is portfolio discipline, exiting lower-margin crop protection products and investing in higher-value biological and precision agronomy segments.
Corteva has raised its dividend every year since the 2019 spin, with the annual payout at 72 cents per share. The modest yield is paired with a growth trajectory that reflects management confidence in free cash generation.
Seeds are a concentrated market. Corteva, Bayer's Crop Science, and Syngenta dominate globally. Scale in R&D is the barrier to entry.
Commodity prices are a risk factor. When corn and soybean prices fall, farmers become more cautious on seed and input spending, creating cyclicality tied to agricultural markets.
Climate variability is relevant too. Droughts and weather disruptions affect planting seasons, which is why Corteva's investment in drought-tolerant and climate-resilient seed traits matters.
Emerging markets are a key growth vector. Seed genetics adoption in Brazil, India, and sub-Saharan Africa remains well below North American levels, with decades of expansion runway.
Proprietary genetics, global farmer relationships, and a growing biological crop protection platform make Corteva one of the most strategically positioned companies in the agricultural value chain.
That is the company chapter for Corteva Agriscience, the pure-play agricultural science company built from Pioneer's seed heritage, now competing for the future of food production. This is Charged Alpha.
Pioneer genetics, crop protection portfolio, and global food security tailwinds. Now let's see how the planting season played out in the latest results.
Corteva delivered a strong double beat in Q1 2026. Revenue of $4.91 billion topped estimates by 5.7% and rose 11% year over year. Adjusted EPS of $1.50 crushed the $1.17 estimate by 28%, the second strongest EPS beat in this cycle. For an agricultural science company in peak planting season, this is an emphatic print. This is Charged Alpha. I'm Hudson.
And I'm Lena. Corteva is one of the world's leading agricultural science companies, operating two segments, seed and crop protection. Spun off from DowDuPont in 2019, Corteva brings together the Pioneer hybrid seed genetics heritage and DuPont crop protection chemistry. The seed segment includes the Pioneer and Brevant brands, corn, soybean, canola, and sunflower genetics across major agricultural markets globally. The genetics library represents decades of plant breeding investment, that creates a durable competitive advantage. Market cap is approximately $56 billion.
CEO Chuck Magro joined Corteva from Nutrien in 2022, bringing crop inputs distribution experience to complement Corteva's genetics-focused culture. Magro has sharpened the focus on seed pricing power and crop protection innovation while accelerating the capital return program. Corteva's competitive moat rests on the pioneer germplasm library, decades of plant breeding that competitors cannot replicate quickly.
Starting with Corteva's financials, Q1 2020's revenue of $4.91 billion topped the $4.64 billion consensus estimate by 5.7%. Year-over-year, revenue grew 11% from $4.42 billion in Q1 2025. Q1 is Corteva's peak revenue quarter. The spring planting season in North America is when seed and crop protection demand concentrates most heavily.
Adjusted EPS of $1.50 beat the $1.17 consensus by 28.2%, a 33-cent positive surprise. That magnitude of EPS beat in Corteva's peak quarter sets up potential full-year estimate revisions higher. Seed pricing power and crop protection volume drove the upside, with both segments contributing to the Q1 beat versus analyst estimates.
The seed segment benefits from Corteva's Pioneer germplasm advantage. Pioneer corn and soybean genetics deliver measurable yield improvements over competitive products, supporting annual price increases that expand segment margins. Corteva's seed pricing has been resilient even when grain prices soften because the yield advantage creates direct economic return for farmers regardless of commodity price levels.
The crop protection segment generates revenue from herbicides, fungicides, and insecticides. Corteva's Enlist system, a herbicide-tolerant trait paired with proprietary chemistry, is a key differentiated platform in the corn and soybean market. New mode of action chemistry provides protection against resistance development in pest populations, supporting premium pricing over generic crop protection alternatives.
The balance sheet is a notable strength. Corteva holds approximately $4.5 billion in cash against $2.6 billion in total debt, a net cash position of approximately $1.9 billion. That financial flexibility supports dividends, share repurchases, or bolt-on acquisitions without adding leverage. For an agricultural inputs company, a net cash position is an uncommon competitive advantage.
Management maintained full-year 2026 guidance after the strong Q1 print. At this stage in the year, guidance maintenance implies conservative full-year estimates. The spring planting season read-through is positive. Farmer purchasing behavior in Q1 suggests confidence in commodity economics and willingness to invest in premium seed and crop protection for the growing season.
The analyst community's reaction to Corteva's double beat is broadly positive. A 28% EPS beat in Corteva's most important quarter is material enough to prompt price target upgrades across the coverage universe. Analysts who model Q1 as a leading indicator for full-year performance will be marking estimates higher following the beat magnitude.
The constructive view centers on seed pricing power. Corteva's Pioneer brand has demonstrated the ability to raise seed prices annually in corn and soybeans, a trait-based pricing advantage that compounds margin expansion over time. Bull's model continued seed price improvement of 3 to 5% per year as Corteva introduces new germplasm with documented yield advantages for farmers.
The skeptical analyst view focuses on crop protection patent exposure. Key active ingredients in Corteva's herbicide and fungicide portfolio face generic competition as patents expire. Generic entrants compress pricing faster in chemistry than in seed genetics. The innovation cycle must constantly replenish the protected product portfolio to sustain revenue growth in the crop protection segment.
Emerging market growth is a key analyst debate. Corteva is expanding in Brazil, Southeast Asia, and India, markets where improved seed genetics penetration is well below North American levels. Bulls model Brazil as the next major seed market opportunity. Bears note that FX volatility in the Brazilian real and Argentine peso creates significant revenue reporting headwinds on a US dollar basis.
Corteva's valuation at 3.2 times trailing sales reflects a premium over commodity chemical peers, but a discount to pure-play seed genetics companies. Analysts who model Corteva's Pioneer franchise as a growing multiple business see the current price as an attractive entry. Those who model crop protection patent headwinds as persistent view the current multiple as fully reflecting the seed genetics premium.
The bull case for Corteva starts with seed genetics compounding. Pioneer's germplasm library represents decades of plant breeding that creates measurable yield advantages for farmers. As Corteva introduces new corn and soybean genetics annually, the yield improvement track record supports consistent price increases. Bulls model seed margins expanding as the genetics platform transitions into higher profitability trait-stacked products.
The crop protection innovation pipeline is the bull case for portfolio renewal. Corteva's investment in new mode of action chemistry creates a pipeline of patent-protected products to replace expiring assets. The Enlist system and isoclast insecticide represent the transition from legacy commodity chemistry to proprietary differentiated products that sustain margin quality in the crop protection segment.
The net cash balance sheet amplifies the bull case. With $1.9 billion in net cash, Corteva can accelerate buybacks when the stock sells off, fund bolt-on acquisitions in seed genetics, and grow the dividend. Capital return discipline at a company with seed pricing power and a premium multiple creates a durable total return profile for long-term investors.
The bear case for Corteva leads with crop protection patent exposure. As key herbicide and fungicide active ingredients lose exclusivity, generic manufacturers price them aggressively below Corteva's branded levels. The patent cliff creates a structural revenue headwind in crop protection that requires sustained R&D investment to offset, and new chemistry regulatory approval timelines can extend across many years.
Weather dependency is a structural earnings risk. Corteva's Q1 revenue concentrates in North American spring planting, a season that can be disrupted by late cold weather, flooding, or drought. A single adverse planting season can compress seed and crop protection volume significantly, creating quarterly earnings volatility that is difficult to hedge or fully anticipate in guidance.
Emerging market currency risk creates reported earnings volatility. Corteva's Brazil business is one of its fastest-growing operations, but the Brazilian real has experienced significant depreciation cycles against the U.S. dollar. When the real weakens, Brazil revenue translated into dollars compresses, regardless of local market performance, creating a persistent FX reporting headwind.
The Dow-DuPont spin-off legacy creates non-operating cost overhang. Environmental liabilities, pension obligations, and shared services costs from the legacy DuPont structure continue flowing through Corteva's results. Bears argue these legacy costs are understated in current earnings models and will compress free cash flow relative to adjusted earnings for longer than management projects.
Bayer Crop Science is Corteva's primary peer in seed and crop protection globally. Bayer's Monsanto acquisition brought the DeKalb corn genetics franchise and Roundup system, competing directly with Corteva's Pioneer genetics and Enlist platform. Bayer faces Roundup glyphosate litigation that has kept its agricultural valuation compressed versus peers.
Syngenta, now owned by ChemChina, is the dominant global crop protection company by revenue. Syngenta's herbicide, fungicide, and insecticide portfolio competes with Corteva's crop protection segment in every major agricultural market. As a private company, Syngenta does not provide public market valuation context, but it sets competitive pricing pressure in markets where both companies operate.
FMC Corporation is the closest publicly traded pure-play crop protection peer. FMC specializes in insecticides and herbicides without a seed genetics business, making it a simpler valuation than Corteva's combined seed and chemistry model. FMC trades at a lower multiple than Corteva, reflecting the absence of seed genetics margin premium and the greater direct exposure to crop protection patent headwinds.
On valuation, Corteva at 3.2 times trailing sales commands a premium to FMC and Bayer Crop Science. The seed genetics franchise justifies a higher multiple than pure crop protection businesses. Pioneer's pricing power and repeating revenue base carry economics more similar to a branded consumer goods company than a commodity chemical manufacturer. Bulls argue the premium is still conservative relative to the compounding trajectory.
Corteva's options market activity heading into Q1 earnings was relatively muted, consistent with an agricultural inputs company where earnings depend on weather and seasonal timing factors that carry genuine uncertainty. Pre-earnings implied volatility was moderate, reflecting the planting season uncertainty. No directional call or put skew was notable ahead of the print, consistent with neutral positioning.
Post-earnings implied volatility collapsed after the 28% EPS beat resolved the event risk. A beat of that magnitude in Corteva's peak revenue quarter produced a positive stock reaction and rapid implied volatility compression. Investors who held calls through the earnings event benefited from both the directional move and the volatility crush. Corteva's beta of 0.68 limits the absolute magnitude of post-earnings moves.
Insider activity at Corteva reflects CEO Chuck Magro's tenure since 2022. Magro built significant equity through performance-vested compensation tied to multi-year earnings targets. Scheduled plan transactions are the primary filing pattern. No notable open market purchases ahead of the Q1 print, consistent with an agricultural company where seasonal earnings timing is well understood within the organization.
The combined read from options and insider data is neutral to constructive. Pre-earnings implied volatility reflected genuine planting season uncertainty that the Q1 beat resolved decisively. Insider transactions follow standard plan schedules without open market conviction buying. For Corteva, the investment thesis turns on seed genetics pricing power and crop protection pipeline replenishment, both of which Q1 validated.
Corteva delivered a strong double beat in Q1 2026, revenue 11% above prior year, and EPS 28% above estimates in the peak planting season. Seed genetics pricing and crop protection volume both contributed to the upside.
Bottom line, the Pioneer seed franchise commands premium pricing, and the Enlist crop protection platform is expanding. With a net cash balance sheet and a growing dividend, Corteva is the quality agricultural science compounder in the large-cap materials sector.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.